Hello, good evening, everyone. Welcome once again to the second session of the wonderful series on charitable trust that we are having. Today, I also recognize the presence of Chairman Manish Bhai, who has exclusively come to hear and attend Sanjiv sir, who's the learned faculty for the first session today. I also have with me council in the colleague in the council, Vimal Agrawalji, and the coordinator of this session, Gautam Lat. Welcome both of you. Friends, I would like to, I'm sure Manish Bhai would have shared this, but one person behind the entire breakthrough that we've got in a very record time, a direction from the Commissionerate of Charity Commissioner, CC or Sir, the office that has instructed to open up and provide all the certified deeds in a record 18 hours. The one person who has helped in all of this and the representation that was made and was effectively followed up, Sanjiv Brahme sir, the faculty today. Sir, we really congratulate you and we really thank you for being there with WRC to ensure that we follow up so extremely, so effectively, and we get the result also outside. Um, the output or maybe the fallout of this entire process was when Manish Bhai and we made a representation and met the CC sir. One big opportunity that has been highlighted is what if we can have special audit just like we have in income tax. If we can have something like that, even in this charity commissionerate also, and especially in the case of trust deeds, wherein accounts come from so variety of places with different kind of accounting, with different kind of structuring. What if we can have a panel of chartered accountants who can really help charity commissioner also work on this very effectively and maybe control and regulate this very smoothly or efficiently. So I think that is one big opportunity, and we are definitely gonna meet all the commissionerates again, and people have really shown a lot of interest and they have been in talks with us to ensure that we come out with a solution and we present them a great big opportunity that could be for chartered accountants. On this note, welcoming you again to this wonderful session, and I have already set up the platform to hear Sanjeev sir, who comes from a vast experience of dealing this topic. I would now request my colleague in the council, Vimal Agrawal, to please introduce the faculty for the benefit of all the participants.
Thank you, Arpit. Good afternoon, everyone. On behalf of WIRC, I would like to introduce our today's speaker, CS Sanjiv Brahme. Sanjeev ji in practice since last 42 years. He is partner in Messrs. BK Patwardhan and Company. He is proprietor in SG Brahme and Company. He was managing committee member of Thane branch in 2007 to 2010. He was chairman in Thane branch of WIRC in 2009-10. He is regular faculty in various forms on direct tax at many places. He conducted mock tribunal at various places. He is secretary in Indian Red Cross Society Thane district branch. He is vice president at Marathi Granth Sangrahalaya. He is life member at All India Federation of Tax Practitioners. He is life member at Tax Practitioner Association Thane. He is director in Garje Marathi Global Foundation Thane, Section 8 company. He is recipient of recognition of CA in Social Service Award by WIRC on 2015. He is recipient of Thane Navratan Puruskar awarded by MP of Thane district. Now I request Sanjeev ji to take the charge. Thank you.
Thank you, Vimalji. Before Sanjeevji could take in, I would request all the participants here to please, we have officially launched a Telegram channel of WRC, that is the WRC Connect. Please follow us, follow WRC and join this Telegram channel so that you can get all the recent updates and all the activities that WRC is doing. You can get a real-time update of this right from WRC. Thank you once again for attending this session, and Sanjeevji, over to you, sir.
Yes. Should I start?
Sir, absolutely.
ज्या ज्या ठिकाणी मन जाय माझे त्या त्या ठिकाणी निजरूप होत होते मी ठेवितो मस्त त्या ठिकाणी तेथे तुझे सद्गुरू आहे दोन्ही सद्गुरूंना माझ्या वंदन सद्गुरू पण माझ्याबरोबर आहेत आता आणि सरस्वती माला वंदन. Chairman of WRC, Shri Manish Gadia ji, Secretary of WRC, Arpit Kabra ji, Vimal Jagrawal, the Regional Council member, and Coordinator Gautam ji, my fellow colleagues who are present on this virtual mode of today's session, and all the people who are connected with this, even the WRC staff who are connected with this. Yesterday it started and today also we are here. Good evening to all of you, and let me start. It's a very huge topic that way, presentation on taxation of trust. Basically, when I say vast, there are hardly 4 sections, but then when it comes to the profession as such, it's a very huge task, and we are generally not either aware or we are not interested in having this sort of practice in the charitable trust, whereas other professionals are way deep in this practice. Now we have to take a cue and see that we are also in this practice in long way, including representation to charity commissioner. I believe that the WRC also is making all efforts to see that we are allowed to represent before the charity commissioner. I believe that that is going on, and hope it will be a huge success in days to come. Now, when we speak about charitable trust, before I go on my first slide of the sections which are applicable to charitable trust, what are the acts under which a charitable trust can be created? One is Bombay Public Trust Act, which is normally known to everybody, which is now known as Maharashtra Public Trust Act. Then Society Registration Act, Bombay Non-Trading Corporation Act, Section 8 Company, and the Indian Trust Act. Now, Bombay Non-Trading Corporation Act is hardly known to anybody, but there are some manufacturing associations which are registered under Bombay Non-Trading Corporations Act. And the registrar of firm himself is a registrar for Bombay Non-Trading Corporation Act. Of course, presently there are hardly anybody going for a Bombay Non-Trading Corporations Act, and generally people are following either Society Registration Act or Bombay Public Trust Act or Section 8 Company. So these are the various acts under which a trust can be created. Now let us go to the sections which are applicable to charitable trust. Section 2/15, that gives a meaning of charitable purpose. Section 10/23C, income which do not form part of total income. Section 10 itself gives what is the income which is not taxable, which is not forming part of total income. And Section 10/23 speaks about the charitable trust and the income which is not forming part of total income. Section 11 is the exemption of income from property held in trust or other legal obligation for religious or charitable purposes. Next, please. Section 12, income derived from such a trust from voluntary contributions, not being contribution made with a specific direction that they shall form a part of the corpus of trust. Section 12A prescribes the conditions of registration. Section 12AA prescribes the procedure for registration. Section 12AB, which is not there in my slide, but which is a new section which has been introduced for re-registration of all the trust or the registration of the trust which have not been registered at all. There are different forms for that, but then I believe there is one more faculty will be addressing these sections and the various procedures under those sections. Section 13 enumerates the circumstances under which exemption available under section 11 and 12 can be withdrawn or denied. Next. Now we have to go what is charitable purpose. So which has been defined as section 2/15. As you can know, section 2 defines various definitions are given in section 2. So section 2/15 also gives a definition of charitable purpose. Now if you see, it is inclusive definition. They are not mentioned directly what is charitable purpose. Charitable includes relief of poor, education, yoga was inserted by Finance Act 2015. Prior to that, yoga was not inserted because that was after the change of the weather at the national level, that the yoga was inserted. And medical need, preservation of environment, preservation of monuments or places or objects of artistic or historic interest, and the advancement of any other object of general public utility. Now, in this case, if you see relief includes, there are specific objects which have been mentioned: education, medical relief, yoga, environment, preservation of monuments, and the relief of poor. And the last limb, which is called last limb of Section 2 by 15, advancement of any other object of general public utility. Next. Next, please. Now, there is a proviso which has been added, and it says that provided that the advancement of any other object of general public utility shall not be a charitable purpose if it involves the carrying on of any activity in the nature of trade, commerce, or business, or any activity rendering any service in relation to any trade, commerce, business, for a sales or a fee or any other consideration, irrespective of the nature of use or application or retention of the income from such activity, unless such activity is undertaken in the course of actual carrying out of advancement of any other object of general public utility. Next. And the aggregate receipts from such activity during the previous year do not exceed 20% total receipts of the trust or institution undertaking such activity or activities of that previous year. Now, if you see why this clause must have been brought in, that there are some associations which are carrying on the activities like holding seminars, conferences, workshops, and some people are charging some good amount of money, and whether this is their business or whether it's a trade or commerce or whether it is really a charitable activity. Now, normally these sort of associations, the members are also from the like industrial associations or manufacturing associations, trade associations are normally covered in this particular clause, because that is not per se, it is not an educative activity, but it is involved the any other object general public utility. Now, the question may arise also that whether the activity which are carried on by these associations will anyway benefit the public at large. So from that angle, this particular proviso was brought in, and the proviso further was brought in by the amendment about the 20% of the total receipts. So one has to be careful where if there is a business activity which is incidental to the main activity, then there is no question. But still, we have to be very careful while considering this Section 2 by 15. Now, this particular section has the application for educational and medical institutions, or even institutions working for relief of poverty, because there is no commercial activity involved in it. Even if there is a leasing of premises, still it will not affect the education medical institutions or activities which are being run for the relief of poverty. Yeah, next. Now, what is charitable purposes? Then it comes with along with Section 1023C also is also linked up. Now, what is charitable purpose? If the definition of charitable purpose is construed literally, then it is violation of principle of equality and it will be unconstitutional. Now, this was Section 1023C(4). While dealing with that, the Article 14 of the Constitution was wrote in, and it was opined that mere charging of fees does not destroy the character of a charitable institution. So once you say why this particular sentence has come, if the definition of charitable purpose is construed literally. Now, when you say charitable, it necessarily presupposes free. Now, if that is construed in literal meaning, then it will be violating of principle of equality and it will be unconstitutional also. That is why if I am charging fees, I don't destroy the character of the charitable institution, because fee charging is going to be covering my expenditure. From that angle, this has been stated. The court should always endeavor to uphold constitutional validity of provision, and do so the provision in question may have to be laid down. The court has to consider that upholding the constitutional validity of the provisions, and doing so, they should read down the provision in question very clearly. Now, Section 2/50 is only a definition clause. The expression charitable purpose appearing Section 2/15 of the said Act is read in the context of Section 1023(c)(4) of the said Act. We have to give up the strict and literal interpretation sought to be given to the expression charitable purpose by the revenue. As I mentioned earlier, if you see charitable purpose literally, then everything has to be given free of charge. Then 1023(c)(4), which comes later on in my presentation also, will have some different impact. So to avoid that, this particular the courts have opined that charitable purpose cannot be construed in literal sense. It has to be construed in a much liberal way. Next. Where an institution is not driven by a desire or motive to earn profit, but do charity through the advancement of an object of general public utility, it cannot be said as an institution established for charitable purposes. India Trade Promotion Organization, wherein this matter had come up for a discussion, that whether it is for general object of general public utility and whether they do charity with the earning of profit, is when the institution is not driven by desire to earn the profit. That means ITPO, is it an organization formed to earn only profits? It was not so. So when the denial was there, because it was tried to come in the definition of advance under an object of general public utility, even though that was the case, whether the profit element was there or not, that was decided by the Delhi High Court, and the denial was refuted. I mean, it was restored. Now comes to next point is activities carried out by trusts for providing employment to rural poor cannot be made as a commercial activity. Now, Tamiz Thai Seva Trust was involved in providing employment to rural poor, which was held that Section 11, it is eligible for exemption under Section 11 because the activities of the trust are not for earning profits, but it is charitable purpose and coming under relief of poverty. So it is not coming under last limb of object of general public utility. Next. Advancement and development of trade, commerce and industry in India, income earned from incidental activities is eligible for exemption under Section 11 and 11 and 12A by the same token. As I mentioned earlier, the various organizations of Indian Chambers of Commerce Industries or Federation of Indian Chambers and Commerce of Industry, FICCI, Cochin Chamber of Commerce. Of course, when we say this, when we draw the reference of this charitable trust like Indian Chamber of Commerce or Cochin Chamber of Commerce or FICCI, the ownership of the trust to prove that the objects are of charitable nature, even though they are conducting workshops or seminars and charging the fees, still they have to prove that it is not for any commercial interest or with the idea of trade or business or commerce. If there is no question of the business activity therein, there is no question of denial of exemption under Section 11. Receiving fees simply settled is not reason enough to hold that the activity is not a charitable activity. The fundamental principle, essence of the activities has to be seen. As I said, the onus is on the trust to prove that even though they are charging the fee, it is not it is a charitable activity and it is not for earning business, or it is not a trade or commerce. Now the next para, the two tests for deciding whether an activity is business is whether the same activity is undertaken with the profit motive, and two, whether The sale activity is whether sale activity has continued on the sound and recognized business principle. Clearly, therefore, in a situation in which an activity is not undertaken with profit motive or on sound and recognized business principle, such an activity cannot be considered to be business activity. This was the case which had come up in the case of Army Welfare Placement Organization. That was Delhi Tribunal judgment. The matter had gone up to tribunal, and they have opined that even though they are charging the fees, so long as the activity is not carried on with a profit motive and is not on the sound and recognized business principle, then there is no question of denial of the registration, and it cannot be caught in the gimmick of Section 2/15. Next. Here, I have quoted a judgment of Gujarat High Court in the case of CIT or Gujarat Industry GIDC. Now, as you know, GIDC is a government, semi-government undertaking or a corporation which has come up with the Gujarat Industrial Development Act 1962. Now, it is a charitable trust which was taken up under that act, and they were the purpose of establishing the GIDC was securing and assisting rapid and orderly establishment and organization of industry areas, industry estates in state of Gujarat, and for purpose of establishing commercial centers in connection with the establishment and organization of such industry. It could not be said the activities are carried out by a civil either in nature of trade, commerce, or business for a sale or fee or any other consideration so as to attract provision Section 2/15. And the same could be said to be charitable purpose, and consequently the assessors are entitled to exemption under Section 11. I have roped in Section 11 because Section 2/15 has necessarily connection with all the sections connected with charitable trust and activity, like 10/23 or Section 11 or Section 12 or Section 13. Now here this GIDC is a government undertaking coming under particular Gujarat Industrial Development Act. Now they charge certain fees for even form fees or even later on processing charges. Now that fee also they had considered that it is not it is coming under business of trade or commerce, and that is why there was a denial of exemption, but it has been restored by the Gujarat High Court. Next one. Now, again, we are still on that charitable purpose only, where motive of the assessee is generational, is not general profit, to provide training to needy women and men in order to equip or train them and make them self-confident and self-reliant, and a clinical sales or trust own fund generation was for furthering the objects of trust, proviso to Section 2/15 would not apply. This was Bombay judgment, and here the women organization, they were making the women self-sufficient, self-reliant, and the whatever items they had manufactured, they had prepared, were also sold. Now, though it is called occasional sale, but truly speaking, it is for the betterment of the women entrepreneurs, small cottage entrepreneurs, and that is how it was. The DIT tried to group in Section 2/15, the proviso of the last limb, any other object of general public utility, and tried to deny the exemption, which was granted. Spending money on the marriages of girls belong to particular community. Now, here, even though the later on there has been amendment, and for particular caste or community, if there is a trust, whether the Section 12A will be available or not, Section 80G to rule out, but Section 12A will be available or not. From that angle, spending money on the marriage girls belong to particular community. But then this was considered charitable purposes because the girls coming from a very poor background, and for that the amount was spent by the this Bharatiya Khatri Seva Trust. Next. After crossing over, still will be again be back on 2/15 also in some parts of section 11 or section 1023. But then section 10 is a section which was not known to many of our fraternity members, which has the fulcrum importance, like section 1023C, 23C, ADAE, 383AE was not known to the people, or even for that matter, section 23C 4 and 6 also was not known, and we were always glued to section 12A, 11 and 12A. But this section also has very much importance as far as the charitable trusts are concerned, and let us go through that. 1023A, that is which is the institution like our CA Institute, ICI, the income is exempt subject to certain conditions. Then we go to Khadi and Village Industries. Next. Section 10 covers anybody, any body, that's a mistake in that writing, any body constituted under Central State Act for administer public endowment, which includes temples, gurudwara, Waqf board, or any place of private public religious worship. Now, the funniest part of it is the body which has been constituted for administration management of these public endowments, the income of theirs is exempt under 1023 BBA. But the basic trust, the basic endowment of society is not exempt. This is by way of proviso 1 mentioned in the section 1023 BBA. Next. 3AD, University Education Institutions solely for educational purposes, which is wholly or substantially financed by the government. This envisages aided schools and colleges. Now here, words wholly or substantially financed by the government cannot be confined only to the NGO grants, as apart from providing NGO grant, if the government grants land, invests money in building and infrastructure, and also runs education institutions. All these factors have to be taken into consideration to decide whether institutions wholly or substantially financed by the government. Now, as far as the this section is concerned, we were not aware of this section. Now, what is financed by the government? We know that many of our schools and particularly colleges, schools basically, they receive the grants, and the grants, they come in the form, in the two forms. One is the salary for the teachers and even the lower staff, and also maintenance grant. Of course, the maintenance grant we will receive for years and years, but salary is received very promptly. It goes directly to the account of the employees. Now, this particular aspect was not known. 1023C 3AB was not known to us. Now, directly the whole income is exempt. Of course, if you see the income side of it, we have got the salary grant received and the income from other sources like interest on fixed deposit, etc., or some donation which might have been collected by the trust. Now, here there could be a problem in the days to come when we are having 1023C and 12AB, two separate registrations. This will be taken care by the next faculty, but then there might be a problem from the government insofar as they might say that your income is educational active income exempt. We do agree, but what of the income from other sources, or even rent income, or even donation income? Why this should not be taxed? Now, on one side, there is a controversy which is likely to erupt with 12AB and 1023C. You are supposed to opt for only one, which is at the moment as per the Act. But then many people are saying that there is nothing like that. We can go for both the thing, but I doubt very much, because if you see the format also, it is different way. Okay, all said and done. If you are only granted 1023C registration, and per chance, if they try to rope in the other income and they say that your income is not exempt. However, I got certain judgments also which say that all income is to be considered for 1023C, which I'll come later on. So there is judgment of CIT, Indian Institute of Management, and wherein it is also financed by the government. So this 1023C AB is a very fulcrum important section for our clients running schools or colleges, which we should, and if they are getting the grants or aid from the government, we should definitely go in for this exemption, and we need not go for 12A. Of course, as opinions differ, people may go for both the registration, but I don't know whether I have been told that if you are trying to file the new form, new registration, then it doesn't accept at the simultaneously. Anyway, that will be covered by your next faculty. Next time. Where state government was extending cash subsidy to the assessee for print and sale of textbooks at low rates to reach children of deprived sections of society, considering the fact that assessee was carrying on the activity which squarely fell within the definite 10/15 charitable purpose 2/15 and was 2/15 and was dependent upon financial state, assessee was eligible for deduction 380. There was Bihar State Textbook Publishing Corporation, which was a trust again, and there they were getting the grant from the government, subsidy from the government for publishing for printing the textbook, but that also have been decided in favor of the trust, that it is coming under 1023C 3AB. Next. (1023C) hospital or institution wholly or substantially funded by the government. Again, same thing like next slide. Next slide, please. Next. Hospital or other institutions wholly or substantially funded by the government. Again, same thing like education institutions. Then 3AA Swachh Bharat Kosh, which have been introduced by the government, which has come up 2014 by the central government. Then 3AAA, the Clean Ganga Fund set up by the central government again after 2014. So the income of these two Kosh and fund, Clean Ganga Fund, are exempt under section 1023. Next. 3AC. Any hospital or other institutions for the reception and treatment of persons suffering by illness or mental defectiveness, or for the reception treatment of persons during convalescence, or of persons requiring medical attention, rehabilitation, existing solely for philanthropic purposes and not for purpose of profit, which is wholly or substantially financed by the government. Now here also, despite this very clear-cut definition of 3AC, the district health and family welfare society was also denied, and government, it was a government sponsored activity. It was entitled for 1023 3AC, but then it was denied. And then the Finance Secretary, Government of India, exemption is automatic for entities which were wholly or substantially funded by the government. It was affirmed by Finance Secretary. But then, despite knowing what is district health and family welfare society, despite that, it was denied that you are not eligible for 1023C. Next. No, next. Next slide, please. I had mentioned earlier about 380 that we were not aware of this particular section. Nobody was going for this section. Of course, now for last 2-3 years, we have been seeing that people are opting for this section and filing the returns accordingly. University or educational institution whose annual receipts do not exceed 1 crore, gross receipt beyond 1 crore will not enjoy this. This is a blanket exemption. But now that has been raised to 5 crore with effect from 1/4/2022 by the Finance Act 2021. So if your gross receipts do not exceed 1 crore till this day, or after that 5 crore, then you are a blanket exemption under section 1023C 3AD if it is your education institution. So your income itself is not taxable. And then later on that has been raised to 5 crore. But if it is exceeding 1 crore, or now if it exceeds 5 crores, then you have to go for special approval from the DIT exemption or CIT exemption. Next, Queen's Education Society versus CIT, that is the judgment which I have quoted. AE, now AE speaks about education institution. Similar provision is there for AE, that is hospital or medical institutions. Again, there is also clause of 1 crore, and later on it is increased to 5 crores. Go back. Last slide, please. Yeah. Now, there is a judgment also, Nehru Prasudika Aspatal Samiti. In that case also, they had less than 1 crore total receipt, gross receipts, annual receipts, and still they were denied this particular exemption under 1023 CAE. Next. 1023C4. Any charitable trust approved by the prescribed authority, which is Chief Commissioner or Director General, having reviewed the objects of the trust and importance throughout India or throughout the state. There is a different list for that. That is approved by the, earlier it was approved by the board, then it was left to the Chief Commissioner or Director General, that is C4. Then next is 5. That is India International Center. I have quoted India International Center, that is the, it was government approved, still it was denied that exemption. Then 5, institution for wholly for public religious purposes or charitable purpose as approved by the prescribed authority. Earlier it had to be noted by the central government. Now it is left to the Chief Commissioner and their GG B351 2007. And the list of such are covered under rule. Such institutions are covered under rule. Next is that is the Institute of Chartered Accountants, but then I'll take it later on, I believe. Okay, let me go through. The institute was denied that that is a violation, since institute is running the classes, the computer classes and orientation classes. It was denied the exemption that you don't come under 1023C4, but then the ITAT has Delhi High Court has restored that. And then later on, it is for the 6, 7, 7, 8, 8, 9, 9, 10, 10, 11, 11, 12. And but then subject to petition complying with other conditions which are mentioned in the order. Next. Six, any university education solely for education purposes which are not financed by the government but which are approved by the prescribed authority. As I said, once it exceeds 1 crore, you are supposed to approach the CIT exemption or DIT exemption and get it approved under section 1023C6. Now, as far as this clause is also concerned, this was not known to many people, and people are generally going for 12AA. That are very standard, 12A or 12AA, and very standard practice in our profession also. Now people have started realizing, people are going for the registration also. Now, of course, this is when I say now, it is not today's case, but some time back, some years back, it started. Now, I have quoted some few judgments, which is of Pango International Charitable Trust. Capital expenditure incurred wholly and exclusively for achieving objects is the entitled exemption would not constitute part of total income. They tried to rope in that your annual income, gross receipts include, they had roped in the capital expenditure also. Application of income is required to apply in India, American Hotel and Lodging Associations. Yes. Venue Charitable Society, that is just because fees are being charged and society has categorized as a patient, denial of section 10/23C was not justified. Against the assessee, there is one judgment of New Noble Education Society down below. Money advanced to another education institution cannot be treated as application of income to object for which the society was established. Such a transaction would only mean that the funds of the assessed society had not been utilized solely for the purpose of education. Society would therefore be disentitled for being granted approval under Section 1023C6. So this judgment also was there, and whether the any money given to other society can it be called for as a application to the object on the objects of society or a trust, that is to be established. Next, this section requires that the institution should exclusively exist for education, and is advised that the trust should not have objects of general public utility. While calculating limits of gross receipts of 1 crore, all fees grants. See, I was just mentioning this earlier also, that it is not just the income from the grant that which should be considered for the calculation of gross receipts of 1 crore, but all things put together, even the fees, donations also should be included. And if it exceeds if it doesn't exceed 1 crore, then you are covered under that section. But if it exceeds 1 crore, it is better, without taking any chance, that you go for specific approval from the Chief Commissioner or the direct exemption. Now, the question was whether what is substantial by the finance by the government. Who should decide what is substantial finance? Whether it is 20%, 30%, 70%. So it is mentioned that it's 50% of the total receipts. If it is financed by the government, then it comes under this clause, and it enjoys the exemption, blanket exemption. But then one more, this is again Rule 2BB. I have just another judgment which I have seen, All India JD Education Society 338 ITR, that was a 2011 judgment of Delhi High Court, which has stated that registered under Section 12A is not a conclusive of its right to have exemption and approval under Section 1023C. Just because a trust enjoying the exemption on 12A doesn't mean that it is automatically it has a right to have the exemption and approval under Section 1023C. It could be independently weighted by the authority, and then only they will come to the conclusion that whether you are allowed or you are entitled for exemption under Section 1023C. 1023C 6A, any hospital or medical institution which is not financed by the government and existing solely for philanthropic purpose and approved by the prescribed authority. Applicant for approval under Section 1023C 6A cannot be rejected merely on the ground that a chemist shop was being run in the hospital premises. Now, this section, this judgment which I have quoted, that in many hospitals you'll find this particular aspect, that there is a chemist shop also in the hospital premises. It may or may not be run by the hospital. It may be by the some other organization. But presuming that it is run by the trust, the question comes in whether it's a commercial activity and whether it should be considered for 1023C 6A or not. But then this Bombay High Court judgment, which has been very clear that even though the chemist shop is being run, it cannot be, the application cannot be rejected because of that situation of that factual position. Now, in all the above cases, 5 to 6A, which are covered by Rule 2C and 2CA, and also covered by Form 56 and 56D. So you have to apply in Form 56 and 56D. It is not mentioned here, but I have just noted what is relevant is activities of the trust. I have just considered this section, circular number 194 of 1617 of the CBDT. It was reproduced in the decision of Birla Vidya Vihar Trust 136 ITR in Calcutta High Court judgment. It points out that even if there has been actual use for non-educational but philanthropic purpose and covered under Section 11, exemption under Section 1022 that time, now 1022, you can always take a recourse to the earlier judgments also, even though it is applicable in 1022. So now 1023, it should be considered and other income used for philanthropic purposes can be considered for relief under Section 11. That means the court, what court has directed or what circular also said that if there is a non-education activity by educational trust, then you have to segregate both the activities. The activity which is not education activity will be covered under Section 11, and accordingly they will be enjoying the exemption 11. The same view was also mentioned by in the case of Apijay Medical Institute, that was 45. It's a 1993 Calcutta High Court judgment again, and Bombay High Court judgment of Bombay Kerala Samaj in 1996. In both the cases, the circular of number 194 was followed, and though one was medical education and one was education activity, the segregation of the activity was done, and the other activity was covered under Section 11. This is not in my PPT. I just noted it down later on. Now there has been amendment by Finance Act 2017. Further also there have been amendment with effect on 2022, 1/4/2022 by Act of 2021. Here it's going to be a, I believe it's going to be a fight. Up till now, though there was a amendment by Finance Act 2017, we have not yet come across any cases, whether it is first assessment or in regular course of hearing assessment, whether such a view was taken that if you are already registered under Section 10/23C, whether you are entitled to benefit under Section 11. Now this we are going to encounter this problem later on with the new amendment and going for only 2 separate registrations. But there have been lot of provisos to 10/23C. It's a difficult proposition to go through all these things and come out on that any version on that. But I have restricted myself by mentioning only by a note on this line. Next. Identical amendment was made in Section 11, explanation 2 to Section 11, being contributed specific directions that they shall form part of corpus of the trust or institution shall not be religious purpose. Now, if you give donation to other trusts for their capital expenditure or their earmarked donation, earmarked funds donation, now that as per this amendment, it will not be considered as an application for in your hands, in the hands of a donor. So then, what is the recourse open? Then you have to give by way of only a regular donation. It will be coming a voluntary donation in the recipient hand, and the recipient will forward accumulation notice to the officer, and according take that thing to earmark funds. I think that is the way it will have to be handled. Of course, till now, I have not come across any case wherein the corpus donations given by one trust to another. I have not come across that particular aspect. And whether after doing that, whether the recipient trust was not, the donor trust was not granted any benefit, I have not come across that. I don't know whether it will come in the faces assessments now. Now, education activities. What is education activity? Education, in order to be charitable, must be for the benefit of public. Section 2/15 considers process of training and developing the knowledge, common skill, mind, and character of students by normal schooling. Of course, there was one trust which was a sole trustee trust of Loka Shikshan Trust, which was not granted the benefit by the Supreme Court, because they said that the same trust was running a newspaper. Now, they had taken contention that newspaper is read very widely and it has got educative value, and though it doesn't educate directly the people, it is indirect benefit to the people under the head of education. But then this was the observation which was denied by the Supreme Court, and they were not granted the benefit of Section 2/15 education clause. Next. However, there are judgments in favor. There are plethora of judgments in all these Section 2, right from Section 2/15 to Section 13, and it's difficult to provide all the judgments here, because one thing, it cannot be completed in these limited hours. Second thing, the PPT itself is too big. As it is, my PPT is run into nearly, I think, what 60 to 65 pages, and it is 150 slides. So, continuing education diploma and certificate program, management development program, public talks and seminars, workshop and conferences constitute education so as to qualify as a charitable purpose. Mere existing of profit. This is a case of, later on I have quoted the case of Jodhpur Charter of Society also. On the issue of proviso 2/15, the same as explained in circular number 11 dated 19th December. From the said circular, it appears that a newly inserted proviso to Section 2/15 will apply to entities whose purpose is advancement of any other object of general public utility. So, whether what is the purpose, whether it is educative material or whether it is existence of profit. Now, if there is no existence, element of existence of profit, it may happen surely because of the conducting the workshop and the fees collected for that. But if it is not the sole intention to earn the profit, then it will not be disqualified itself for 1023. Next. The two judgments which are quoted, Ahmedabad Management Association, Jodhpur Chartered Accountant Association. Now, Saurashtra Education Fund, Gujarat High Court has mentioned in 273 idea, though, next slide. Though educational institution and institutional activities are closely interconnected in Section 11(1)(a), made with Section 2/15, it is activities which are relevant, whereas in Section 1022, now 1023, both the institution and activity are in focus. An educational institution, therefore, more than a body carrying on charitable activities in the field of education as contemplated by Section 2/15. So, they have very clearly demarcated on Saurashtra Education Foundation that education institution, therefore, it's a more than body carrying on charitable activity. Because it may have different activities also, along with education, but connected with education. Next. Provision for accommodation, food and beverage against payment of charges, applicable provision provided to Section 2/15. India International Center, it was here that to achieve its objective, SSC conducted large number of programs, including exhibitions and discussions, and since there was no funding from the government or any outside body, SSC could not be said to engage in activity in the nature of trade or commerce. They had charged for the accommodation, food and beverages. Now that was based on that, they were denied the exemption 1023(c)(6), but then the Delhi Tribunal has ruled that there is no question of bringing proviso 2/15 of any other object of general public utility, and it is an educational institution itself. Giving accommodation will not deny them the benefit of. Eligibility of persons for exemption, Bharatiya Gram Seva Niketan Udyog Mandal. The main object was to encourage backward and discarded people towards education and livelihood to them. The same was not at point amended by SSC. Also, the trust and a college that help in enhancing the future of students by providing the education and making all the diploma courses in polytechnic engineering, which are duly approved by the AICTE. Thus, all objects were in consideration for granting the approval 1023(c)(6). Delhi ITAT has given that benefit to the Bharatiya Gram Seva Niketan. You are seeing that what judgments are coming with 1023(c) and Section 2/15. Of course, previously when the respective commissioners were in charge of the charitable trust, there were, though there have been judgments, but then if you see after creation of CID exemption charge, there has been a lot of rejections, lot of people going for writs also. Next. Ramlal Bhasin Public School. No, next. Now this is 380. The entity must be registered as a university or education institution existing solely for educational purposes and not for the purpose of profit. Thus, it was not in dispute that association schools are affiliated to Council for the India School Certificate (ICSE) board they are affiliated to, and the copy of all the certification registration was also kept on record. Despite that, there was a denial. However, the court has given them the judgment in their favor, following the decision in case of CIT versus Beach Children Education Society. On the basis of that judgment of Karnataka High Court, the Delhi Tribunal, Amritsar Tribunal, have granted the benefit of 10/23C. Sun Swan Education Society, same thing. It's a 18th March 2020 judgment. The matter was remanded. That here the association was having objects both in nature of performing charitable act and also running education purposes without any purpose of earning profits. Further claiming exemption for the profits earned from performing education activities provided in Section 1023C6 and benefit of claim or exemption for receipts income from charitable activities provided Section 11. Earlier also I read out that if there is a two-way activities, one for the education, the other for other from charitable activity, then it has to be segregated, and one will be entitled for 11 and the other will be entitled for 1023C. As I was mentioning earlier, that how there is going to be a dispute coming out once if the education institution is having education activity, other also the charitable activities, then how the view is going to be taken by the department with reference to Section 1023 and 11. That is within the it is within in the days to come. Let us see how the department addresses that issue and how we address those issues. See, same thing. Of course, the earlier judgment which I have quoted of that just because the 12AA is there, it doesn't give right to the assessee to grant benefit of Regulation 1023C. But then here, the in this instant case CIT, it was mentioned by the High Court that the CIT should have focused on examining the activity undertaken by the assessee. Because for 1023, what are the activities, whether they are coming under 1023C6 or not, that he has to see. Now, since that was not seen, the tribunal remanded that case to CIT for fresh consideration. Next. Medical relief. The object of medical relief does not mean that it is necessary to provide free treatment or treatment on a considered basis at all. It is acceptable to if the medical institute charges a higher price for the patient who can afford that price and utilizes as revenue to give free or subsidized medical relief to the poor and needy. I can just refer certain cases in Mumbai, and even the charity commissioner, which had one Mr. DG was the charity commissioner. That time he has noted that there are many big hospitals like Lilavati or Rich Candy who are charging stupendous amount of fees for the indoor or outdoor OPD patients, and then he called all those people and said that you must do free service to the society. You are registered under Charitable Act, Bombay Public Trust Act or Society Registration Act. Then you are supposed to do the charitable services also. So then he forced them. Rather, it was the authority, because he could definitely summon them in different under the law also. But he requested them that the people who are the beggars who are on the streets should be given treatment. So you must conduct the camps for these people. Now, when I was just mentioning of Rich Candy, the 2010 judgment that if it is running on profit motive basis, it will not be called for the purpose of medical relief. But then there was a judgment of AMM Hospital wherein it was earning income from patients like other big hospitals or public hospitals. Of course, there are certain hospitals now which are into private limited, purely on a commercial nature. But there are old hospitals which are still under the Public Trust Act and which are charging stupendous amount of fees. But then, of course, the Act also says that when I refer to charitable purpose definition, that it doesn't mean that it should be charitable. The literal meaning, if it is to be taken, then nobody will enjoy the benefit of charitable trust or charitable activity. From that angle, it is to be addressed. Next. Artificial limbs manufacturing corporation of India. Since the aspect activity of making artificial limbs to needed person without earning profit, no contrary material was brought on record by the revenue. Benefit exemption of 11 could not be denied to the. This was a case of section 11, but then I have tried to cover it with medical relief also. Next point. Next. Giving medical aid, social welfare and uplift of poor members of particular community and giving financial help to on the occasion of marriage of members of that community. This is a Surji Devi Kunjila Jaipuria. This judgment also I quoted next. I'll come to that later on. Next. To the next one. Surji Devi Kunjila. Next one. Just hold on. CIT versus CIT. Relief for poor. Next slide. Relief for poor. Now back to that. After Surji Devi Lal, a slide before this, one slide before this, back. Yeah. Relief of poor under this section and the public character relief and not to a body of private individuals. The scope of the relief of poor is wide enough to include any kind of activity which provides support or benefit to the Sundry Trust judgment. In this way, even business activity shall not be a business provided if satisfy the condition of being only a medium to achieve the object of relief of poor. Then the business income shall be treated as income of property. This was a Sundry Trust was a Supreme Court judgment, and even though they had done something for the community, some people who are poor enough and they provided some business to them, and from that angle, this judgment has arisen. Religious purpose. If you see, next slide. Next. If you see, even if we have seen what is charitable purpose. It is inclusive definition. Similarly, religious purpose has not been defined anywhere in the Act, Income Tax Act. So we have to go by common parlance, which is understood by religious activity. Advancement of any other object of general public utility. Next slide. Next. I was just mentioning about Surji Devi Kunjilal Trust, wherein the trust accepted. It was earlier slide, but I'm just mentioning it. The trust accepted that the two objects of the trust, one for giving financial help or otherwise on the occasion of marriage of members of the Vaishya community, and two for social welfare, upliftment, and generally for improving the condition of the poor members of Vaishya community, are not such objects which could be described as charitable objects. They themselves are accepted it. And then in the decision reported, these decisions have to be understood in the context of amendment to Section 13(1)(b), barring benefit. There has been amendment to Section 13(1)(b), barring benefit to any caste or religious community other than those accepted there. Other than those mentioned 13(1)(b). Next. Yeah, advancement of any other object, general public includes any object which will be beneficial even to segment of the society and not necessarily to the whole mankind. However, the object should not be for the benefit of specified individual. The principal object of the Chamber of Commerce is to promote and protect trade, commerce, industry in India or in any part of India. The said object can be treated to be general public utility. It is considered general public utility, yes. And then the contrary observation made, of course, with grain merchants, Association Bombay. Grain merchants. I have one case. I had encountered one case wherein it's an association of certain professionals, and there are some about, it's an all India body with 35-40,000 members, and they were carrying on the activities amongst themselves, but at times they had taken the villages also in adoption. But then the CIT exemption had denied the benefit of Section 11, stating that your activities are restricted to your community, to your professional body community, and they don't benefit to public at large. I said that when they are adopting the villages, or when they are sharpening the knowledge of their own members, it is for the general public, though they are connected with their professionals. It is for the general public at large, which will be going to the society. Still, we haven't got the decision. The 4 years cases are going on in income tax, and now it's a faceless. As far as the Bombay Grain Merchants Association, Bombay High Court, the Supreme Court overruled the view of the judge of Bombay Court in the case of grain merchants on the ground that his view did not correctly interpret the expression objects of general public utility. The inference that it primarily helped the members and not general public was not accepted. In this context, one may refer to the case of CIT Ahmedabad Rana Caste Association. The High Court observed as follows: the general means, why I'm saying, because we are going to encounter this general public utility very much in the days to come. General means pertaining to whole class. Public means the body of people at large, including any class of the public. Utility means usefulness. Therefore, the advancement of any other object of benefit to the public or a section of public, as distinguished from an individual or group of individuals, would be a charitable purpose. And that Gujarat High Court judgment was also affirmed by Supreme Court in the Ahmedabad Kachcha Rana Association. So whether they are very the proper dissection has been made of all the four words: advancement, any other object of general, public, and utility. So all the four words have been properly dissected by the courts. Next. Now, the way we have seen the GIDC, the same case has come with the Gujarat Maritime Board also. That time, the Gujarat Maritime Board was denied the registration 12A, and the Supreme Court observed in that case that it was established for predominant purpose of development of minor sports within the state of Gujarat. The management and control of the board was essentially the state government, and then there is no question of profit motive. It's a government organization, government corporation like thing. Then still, despite that, they have denied the benefit 12A. Similarly, there is one more judgment in the case of Firozabad Shikhobabad Development Authority. It was reported in May 2018. It is again in favor of the associate. It was a body formed under Urban Planning and Development Act 1973. They are doing acquisition and development of land and profits in the process. Section 2/50 is not, and therefore Regulation 12A was restored. That time the judgment of Lucknow Development Authority was relied upon. See the form of it. It's a government undertaking, government corporation, and still because it was established under particular law and particular act, and then they are a trust act, and then they are applied for 12A, they have denied the benefit. Same is the Apparel Export Promotion Council. It's a non-profit organization with the approval of central government for promotion of exports of government and was registered 12A. Assessing officer consider activity in the hands of trade and brought in the amendment of section 2/15 and assessed as normal income. But then it was restored back. That was the Delhi Travel Order, that the trust, objects of trust are charitable nature, and SCC had not covered any activity with the object to earn profit, and since there is no profit motive, the question of attracting residuary clause of section 2/15 does not arise. That is apparel export print count, that is Delhi Tribunal judgment. Next. There is a Saurashtra Trust. Next. Saurashtra Trust judgment, wherein the tribunal held that the trust for running newspaper eligible if it satisfies the conditions relating to business. Now, section 2/15 amendment we have to see, but then tribunal has come out that other than newspaper business was held to be exempt by the income. Other than newspaper business was held to be exempt by the tribunal. But the newspaper is a business purely because the way they carry out the advertisements, then it cannot be claimed as exempt. Next. Objects of the asset fail within the purview of provide medical relief, impart education and relief to the poor, and not in the nature of any other object of general public utility. Therefore, proviso to section 2/15 did not get attracted in the case of assets, and denial of exemption to section 11 was not justified. In this case also, Divya Government Trust, they were giving medical relief, they have impart education and yoga classes also. Despite that, they have denied the exemption and they are taken in section 2/15. As I said earlier in my first opening remark also, section 2/15 is a very dangerous section, and section 2/15 last rather proviso, rather any other object of general public utility is very dangerous phenomena, and we have to guard. If there is no education activity, there is no medical activity, then we have to guard against that section if it is falling within the proviso or within the last limb of the section 2/15. Now come to section 11. Section 11, next slide please. Next slide. Yeah, section 11, exemption of income from property held for charitable or religious purposes. It's a very big section, and it is affecting all the charitable trusts, and we are covered. I mean, as a chapter account also, we are supposed to be very vigilant about section 11. The way we are supposed to be vigilant about section 2 and section 10, we have to be also vigilant about section 11, because it has got direct impact on the taxability of the income of the trust. Next please. The option, exercise of the option. I have seen one judgment 2014 that Industry Extension Bureau, in that judgment they said there is no requirement of making declaration about how balance income is going to be applied. Now, as you are all aware that we have to give notice to income tax officer if you want to accumulate and set apart certain funds. If we have not spent the 85%, then If you have spent only 60%, the remaining 25% has to be set apart for to be utilized in the further years, in the next 5 years. Now there we always give that the resolution is passed and we say this is for building purposes, this is for education purpose, this is for medical purpose, and we give the various activities for which the amounts are set apart. Now here what this judgment says that you don't have to give what exactly you are going to do in that education activity, what exactly you are going to do that building activity, whether you are going to have existing building, you are going to have extension, or you are going to have new building. You don't have to give. You have to only give the resolution that these funds are set apart for a particular purpose. That is the meaning of this judgment, which I have got next point. Next slide. Next slide, please. On this judgment which I have quoted, Industrial Extension Bureau, it says that balanced income, how it is going to be applied, that did not be, there is no requirement. That is correct. When you file form and give notice to the ITO about setting apart of the funds accumulated and set apart for to be utilized in further say 5 years period, you don't have to give exact working that we are education activity, what we are going to do in education, what we are going to do in medical. You have to set apart for a particular purpose. So that purpose is education, purpose is medical, purpose is wedding. You don't have to give the details of the expense which you have to incur in that form itself. This is what the judgment says. Next point. Now the earlier judgment, whether your form is proper or not, whether your declaration is proper or not, whether you are given proper intimation or not, the ITO may go through it, but then he cannot comment that you are not given breakup of the education expenses. That's what I wanted to convey. Earlier, even the delayed filing of the option set apart was allowable, and even the appeals also have directed the ITO to take, or the CIT to take the on record the delayed form 10. But then with amendment from 1st April 2016, the declaration, the notice has to be given on or before the due date as per 139(1). So we have to be very careful. Otherwise, we have to go on to the CIT, whether further to that, whether he'll grant us benefit or not, that's doubtful, because till 2018 there were instructions from the board and they were allowed to entertain your delayed application under 119. But then we have to also see section language of section 11 1B, whether income has been applied in the during the year. It may not be necessary, it may not be even necessary to apply the accumulation. If it is applied in next year, next succeeding year, then 11(1)B says that Exclusion 2 to section 11 statement annexed to the return satisfy the condition that the option without any formalities. That is what the section 11(1)B says. So we have to be, we can be clear about that 11(1)B. Income derived from property in a trust only for such purposes, the trust having been created before the commencement. Explanation. That explanation one has to read and see that even if it is applied in the subsequent year immediately following the previous year, expression 2B, in the case referred to in subsection subclause 2, so much of the income applied to such purposes in India during the previous year, immediately following the previous year in which such income was derived, as does not exceed the said above. Now, when you set apart whether you have utilized or not, basically, if it is utilized in the subsequent year also, that has been granted by the 11(1)B itself, the explanation to 11(1)B, it has been granted. So that also you can see. Next. even if the subsection 6, even if entire expense incurred for acquisition capital as a distributed application of income, the assessee is also entitled to claim depreciation. This was prior to the amendment, because lot many people had claimed depreciation simultaneously also, and the Supreme Court has given a verdict that you have to calculate as a normal commercial principles, and according to that, the depreciation is allowable, despite the fact that the capital asset was also considered as allowable deduction. However, the amendment was brought in, an amendment, prospective amendment, by which now you cannot claim depreciation if you want to claim the whole deduction of the cost of capital asset. Next. Even though I'm just referring to my earlier statement about 11(1)(b), even though suppose there is a profit surplus and you are not given a notice to the ITO, but then you are utilized the entire surplus or major surplus in the next immediately following year, then to my knowledge, in my considered opinion, it should be considered by the ITO when you file the return of income. You can as well claim, provided that was spent before the filing of the return. So that you could take a chance, but then whether you should take a chance or not, that depends on your mental state of affairs and your client also. It is better always to give notice and be happy about it. Subsection 2. Expression to this section does not restrict the application of income beyond 85%. What cannot be treated as application is only the donation made out of accumulated income. You have to give out of the current income only. Whatever accumulation you make, from that accumulation you cannot give any donation. You have to spend by yourself, because you have given notice that we are going to spend on education, we are going to spend on medical or a building. You cannot give that money to another trust and try to claim that it has been the accumulated income has been spent. That cannot be, that is not allowable. Next. (11)(3). Any income referred in subsection 2 which is applied to purpose other than charitable or religious purposes, or ceases to be accumulated or set apart for applicant thereof, or ceases to remain invested or deposited in any forms of boats, special subsection 5, or is not utilized for the purpose for which it is so accumulated, or is credited or paid to any trust registered under PLA or any hospital under 1023C shall be deemed to be the income of such person of the previous in which it is so applied, or ceases to be accumulated or ceases to be invested. As we know that section 11(3) says in what circumstances it can be withdrawn, and in what are these section under which you have to keep investing the money, how you have to invest the money, how you have to utilize the money. And then subsection 4 also is there, 11(4). Section 11(5) gives the various modes of investment, but then there are investments which are specific up to 12. The subclause 12, the investments have been mentioned, but subclause 12 mentions rule 17C, which gives lot many investment arena which can be done by the trust. The shares of cooperative, that has been very long decided decision, long decided case of Bombay High Court, that in any cooperative society or cooperative bank, when you go for loan, you have to be a shareholder. Now that the ITO tried to rope in that it is not coming in 11(5), so it is disallowed and you lose the exemption. Now another interesting circular which I found is CBT Circular 712 dated 25th July 1995 clarifies that restriction related to investment under 11(5) has no application to institutions covered under same 1022, now 1023C, because 1020 the section 11(5) relates to section 12A, whereas 1023C does not take help of 11 or 12A. In that case, the 11.5 mode of investments are not applicable to the trust which are registered under section 1023C. That was the circular of the board of 25th July 1995. Next, please. Next, please. Next to that. Next, this is section 5, subsection 5, giving investment. Allowability of setup of excess expenditure against income of future year. There has been a lot of next please. Next please. Yes. Now there has been always a debate or query from the other chartered accountants or even the income tax officials or the Commissioner of Income Tax that how can we claim the deficit of our area? Where is the provision? Where is the clause in the Act? I said there are judgments because my expenditure, which was earlier I could not get set up because my income was my allowability. I cannot claim a loss or deficit in return of income and carry it forward because the carry forward sections of section 80, 72, 80, they don't allow me to carry forward. So naturally, I have to get a benefit. I have to bring the nil income because my expenditure will be restricted to the extent of the income available for absorbing the expenditure. So what goes for my balance amount of expenditure? Now naturally it has to get carried forward, and then I will involve that. I will include that in the current year expenditure, and then claim against the current year's income of the excess expenditure brought forward from earlier period. There have been judgment of Supreme Court judgment also is there, which I have not quoted here. But then there is a judgment of 14th August 2018 also. Then the Greenwood High School of Karnataka High Court judgment that I have quoted. But I can forward that Supreme Court judgment also. Later I have quoted, noted somewhere. But then it is very clear. Please do not have any misconception that we will not get benefit of the deficit of earlier year. You will get benefit of deficit of earlier year. Now there is one exemption under section 11. Next. Next. Selling of plots. Oh no. Earlier one. Earlier slide, please. Oh, then directly you have come to the next slide. No, prior to that, come 2 slides before that. Yes, selling of plots and premises, town improvement. This was again the Patiala Improvement Board. Same thing like earlier judgment which you have seen about GIDC, Gujarat Maritime Board, same Firozabad Authority, same judgment. Next. This 2020 judgment. Income is from membership fees from a members, specialized services. Mutuality, CITB has rightly observed that there was no sufficient reason to deviate from the appellate order of CITB of the early years, allowing the exemption under Section 1. As decided by us his own case, it was allowed, but subsequent year the CIT or ITA exemption had denied them benefit 11.1. So the Delhi Tribunal said there is no question of going back from the earlier decision. You have to go back and give them grant them the benefit of Section 11. Next point is Karnataka Industrial Areas Development Board, associate trust derived income from fees, penalty, and fine, which are inherent part of the main object. It is same thing like Development Board, so there is no question of denial. Next. There's a disallowance of investing gold bullion by assessing and treating the same as violation of section 11.5, where the tribunal came to the conclusion that purchase of gold by assessee was not application of funds, but an investment in gold bullion, and this investment was in violation of section 11.5. It has nothing on record to indicate that this opinion was formed by tribunal and recorded in its order after the assessor opportunity to put forth their contention. The matter was remanded back for consideration afresh by the tribunal. Investment in mobile property. Next point. Next. 11.5 mentions about investment in home charitable. Earlier slide. No, next to this. Yes, investment in immobile property. As we have seen, section 11.5 definitely makes a mention of investment in immobile property. The funds of the trust can be invested in the immobile property, and it cannot be denied. It cannot be denied. There is no violation. There is a judgment home charitable trust, despite very clear-cut mention in the 11.5, still they went on denying the exemption of 11. Next, Divyang Yoga Trust, which we have earlier seen, submitted instruction that was 1970 inter-trust donations. Next slide, please. Just Gautamji just inform me when to stop. Divya Bandhe Trust submitted instruction that inter-trust donations, that was 2019 judgment, by one charitable trust to another for utilization by the donor trust towards charitable objects was proper application of income for charitable purpose in the hands of the donor trust, and it would not affect exemption 11, especially in view of the fact that it was not case of even that donor had not applied such sums for charitable purpose. Now, this is a donor trust matter that donor has already given, and the donor trust, it was for charitable objects, to be utilized for charitable objects. So one has to see whether it is coming under the whether there is a 85% utilization is there or not. Rest is the it's allowable thing. Praxis Institute. Next point. This was in favor of the assessee. Praxis of participatory practices. They are it was not charging fees from beneficiaries who belong to poor communities. Tribunal also noted NGO like WHO, UNICEF, which engage the assessee were themselves charitable institutions, and they ensure the grants given to assessee grants given to assessee utilized for the purpose of charitable activity and not for any business, and hence they are directed to grant exemption section 11.12. The High Court confirmed the judgment of ICAD in 2015. That was 2018. Punjab Cricket Association. Next point, please. Punjab, yes, correct. Punjab Cricket Association. Partly in favor of the assessee. Punjab Cricket Association was a member of the BCCI, and BCCI has already opted for AOP. It has lost its registration, rather status of a trust, and they are distributing the sort of a surplus to the various member associations. Now the Punjab Cricket Association is also beneficiary of the amount received from BCCI, and the ITO tried to cover everything under provision 2/15 and denied the exemption section 11. The High Court directed, the tribunal directed that you can segregate the income from BCCI, which is already taxed. It was taxed income, which was sort of appropriation, So that cannot be taxed again. So only thing you have to that will be taxed in the normal provisions, and other than which are not being taxed in the hands of BCCI would be taxed in the hands of the association normal provisions. But which have been taxed by the BCCI cannot be taxed again. Applicable provision to Section 2 of the receipt of revenue, test liability and consultancy charges against the activities of providing laboratory test services, state transport undertaking. So that also cannot be they cannot be denied the Section 11 benefit by invoking the proviso of Section 2/15, because I think that's a government undertaking. CNN Educational Trust, I have mentioned very clearly in detail. Next point, please. Next slide, please. Next slide. Next point. Next. I very clearly mentioned about the judgment. Here in this case, the Form 10 was given. There was some lacuna in that form, which was again explained by the assessee, and then it was remanded back to the tribunal for re-examination. The Form number 10, which was submitted along with the resolution. Next. Then I have considered certain there was no judgment of JIS Foundation. Yeah, here the court had already dismissed the appellate department, but maybe the AO was not aware, and he again carried the same way that the order of the tribunal was pending before the court. However, there was no question of pendency. It was already dismissed by the court, and then automatically the order of the AO collapses and the assessee gets benefit. Next point. Promotion of sports. Creative Museum, ITO. Creative Museum designers association registered concerned under Section 12A as a charitable institution. Actually, when done by the assessor earlier, considered was not charitable in nature, particularly when no formal and systematic educational function was discharged by it, rather commercial, in view of the receipt on turnkey project basis from RBI in lieu of services rendered by the assessee. Accordingly, proviso to Section 215 got attracted denial of exemption 11 was justified, but then I could not find the further High Court order because it's 14th August 2020 judgment. But then it has gone to High Court, of course, but I could not find any order. Actually, it was on turnkey project basis from RBI, India Services rendered by the assessee. So that was considered by the ITO and was not granted the section benefit of Section 11. But let us await the judgment of the High Court. Next, is depreciation allowable? Let us close that. No, that is, this will be applied only for the judgment earlier 2015. Then the next point. Next slide. No, earlier to that. Challenge DIT or challenge. Yes, this one. No, earlier. Next. No, sorry, next. Sorry, next. Yes. In this case, the Charitable Trust also similar judgment, and it was in favor of the assessee, the judgment, and Supreme Court has directed that they should be granted benefit as per the earlier orders of the Delhi High Court. Next. There have been two sections which were subsections which are added to Section 11, 6 and 7 with effect 1/4/2015. There have been now it's going to be further There is an amendment to this of section 12AB and section 10 also, that relevance of ATG also is there, because 1023C and ATG, how it go together. Earlier when we used to have ATG, we used to definitely get 12A certificate and then only we used to get ATG. Now how this will be looked into when 1023C is going to be independently considered for registration and not along with 12A, then this will have to be seen. The section 11 has got lot of amendment, lot of proviso. We have to be very careful while dealing with the trust now, henceforth, after we apply for the re-registration. I'll just go for the section 13 also. Section 12 also is very big, denial of registration and cancellation of registration. But then my PPT will be always be there for with the WRC to share with the members. I'll just take to the 13(1)(c). Next point, please. Yeah, here many times the question is asked to me about the remuneration to be paid to trustees, whether it is allowable, whether we can pay remuneration to trustees. First of all, you should see the background of the trustee, what qualifications they have got, what experience they have got, what amount of time they are devoting, and whether the remuneration which you propose to pay, whether it is commensurate with the general climate outside, whether same type of services, how much it will command outside. Accordingly, you should fix up the remuneration to the trustees. Otherwise, you are heading for the denial. It will be violation of 13(1)(c). So we have to see that it is not violative. Whatever remuneration which give is not violative. The next point is alleged receipts of donation from patient lieu of medical services. In one of the cases, it was mentioned that as against the billing for medical services, the donations were given by the patients, but then the donation was much less than medical services. But it was conclusively proved that it was a donation, and then the CIT appeal and ITAT granted the exemption. Next. The Punjab and the Improvement Trust Punjab and Haryana High Court judgment I have quoted, that is self-explanatory. Then the condition for claiming exemption 1112, section 12A, that you have to use 85% of the income. One more question had arisen during the course of discussions with many chartered accountants, that this 15% which we always claim, what is the background for that? Then it is to mention that this 15% statutory deduction. The way we have got 30% deduction, it is also a statutory deduction which is by law you are entitled to, and the rest 85% you have to spend. So people have got that doubt always in the mind that whether what is section under which it is given. So it is statutory deduction which is given, which has been confirmed by Supreme Court also. Laws arising due to surplus. Next slide, please. The next point. Next slide. Next slide. Unapplied income money accumulated state of should be invested reported in the specified norms of boards, which 11.5 specifies. You have to have very careful working and careful consideration to this particular aspect, that if it is unapplied and if it is you are set apart for a particular purpose, then it should be invested, and you keep on investing in the modes of investment as mentioned section 11/5. Next.
Sir, Sanjeev sir.
Anji.
Sir, I would request if we can wind up in maybe next 2-3 minutes.
Because,
yeah.
Yes.
Sir, it's absolutely interesting, and I think we can go on and hear this because these are so relevant to all the cases that we have. But unfortunately, sir, the platform has, and we have the next speaker, Kadakia sir, has also joined us.
I know. sorry, and I really I'm thankful to WRC for taking up this particular issue of trust, basically trust and formation, trust, accounts audit, and the new law and the taxation of the trust. I'm thankful to the WRC chairman Manish Gadiya, Arpit Kabra, the secretary, Vimal Bhai Agarwal, the RCF, and then today's coordinator Gautam, and also the staff of WR staff, Arnold, and my colleague Vikram for having helped me out for this creation of this presentation. Thank you so much. And my thanks to my Sadhguru also, who has been instrumental in giving me this opportunity. Thank you so much.
Sir, the number of slides that were left, it shows the amount of preparation, sir, that you have done for this webinar. And sir, really, I bow down my head in front of you, and amazing, wonderful deliberations that we had. And unfortunately, due to the time restraint, and
Yes.
we had to cut short it. But sir, rest assured, we'll definitely. And one thing that I can see there's a huge demand of is the presentation, that everyone wants a copy of it, because it's
Yes.
been a great resource in its own
Yes.
way.
Yes.
Sir, really hats off, sir. Thank you for your time, and I'm really sorry to cut you in middle, sir.
I have slightly overstepped my time by 15
No, sir.
minutes.
Sir, absolutely not, sir. In fact, we would have loved to take some questions, but sir, if you stay with us, probably at the end, we would take these questions. So please stay with us. You can take a break, of course, because
I have to go because I have to submit one urgent and faceless assessment. I have to make
Sure, sir.
submission by 9 o'clock. After this, I am sitting on that submission. So,
Sir, if you could spell out your email ID once.
yeah,
Sir, if you can spell out your email ID once.
yeah. BKP, B for Bombay, K for Kalyan, P for Pune,
BKP
CO,
CO
@hotmail.com.
@hotmail.com. So, friends, all the participants, should you have any queries, sir, is it okay if they can reach out to you?
Yes, certainly.
Fine. So, friends, please feel free to reach out to sir, and I'm sure I have my colleague Chintan Patel, Regional Council member from Ahmedabad. Sir, one of the finest academicians that we have in the council, accounting, whenever it comes to accounting and all of this. So Chintan Bhai has a great hold over the subject. I'm sure he would be able to, the best person to do a justice to give a wonderful vote of thanks for a session like yours. Chintan Bhai, over to you. Please give a hearty vote of thanks and a well-deserved vote of thanks, please.
Thank you so much, Arpit Kabra, the dear friend, who was in birthday boy yesterday. And, he is the young and dynamic secretary of WS by ICI. And I was just going through the presentation since last half an hour to 1 hour. And the ways you collect and compile all case laws, I think, is it the whole Income Tax Act, or there are only few sections of Income Tax Act you are talking about? Because the many case laws, the disputes which are there in case laws, and your interpretations of the case laws and practical aspects, and the way you covered, I think it's fabulous, and it's going to be one of the best compilations of case laws on taxation aspects of NGOs. And thank you so much, sir, for spending your valuable time. And the learning which we have taken as an organizer, wherever we invite you, we should have more time for you. I think the time was less. Next time we'll definitely try to have more of your time. And
Sure.
yes, again, thank you so much.
It's to address in WIRC.
Sure, sir. Thank you so much for spending your valuable time, and look forward to invite you again, sir. Thank you.
It's absolutely our pleasure, and this is how we do the structuring so well, so that we can have more and more of every faculty, and the platform becomes more enriched by the collective knowledge and wisdom. Thank you once again, Sanjiv sir. Thank you for creating this wonderful session, sir.
Yes.
Jai Gurudev.
Jai Guru.
Now moving on, friends. Next, of course, we've had a huge compilation of wonderful case laws, and what an immense knowledge. Moving on with the same set pace, we have another very academically very prone and a very high, I would say, personality with us. Rajesh Kadakia ji with us. Sir, we welcome you to WIRC. I now request Chintan Bhai to please introduce Rajesh sir, so that we don't put in more time and immediately go and hear Rajesh sir. Over to you, Chintan Bhai.
Sure, I think it's my pleasure to introduce Rajesh ji. When I look at his profile, is the kind of exposure which you are having and the contribution to the profession is immensely being seen in the profile. He was a partner of SR Batlibai and Company, and he's right now a part-time senior advisor with Ernst and Young LLP. He has written a number of books, which includes The Law and Practice of Tax Treaties, an Indian Perspective 2008, published by CCH, Master Guide to Income Tax Act, published by Taxman. Sir, we all have been going through all your books because these books are a resource of inspiration for all of us. And thank you being the source to guide all of us. And he has been author of various online database. Sir is very senior, but however, when you look at his contribution to the online, it is cannot be forgotten, which includes a legaltax.in, including charitable institutions referencer on taxation of charitable institutions, Foreign Contribution Regulation Act referencer, words and phrases referencer, a legal dictionary, and interpretation referencer. So there are many things to be told about, sir, but I think this is something very, very special. And it's a really pride, privilege to have you, sir, addressing all of you. Welcome you, Rajesh Bhai, to this session. Thank you so much.
Thank you, Chintan Bhai. Rightly said, a tall academician and academician par excellence, I would say. And I have got the privilege to work under sir while I was in EY FS Tax. Sir, it's really an honor to see you again, and it's wonderful to have you, sir, at WRC to address us on this very issues on NGOs and charitable trust. Welcome, sir. Over to you. Sir, we are not able to hear you. If you can unmute yourself.
Is this fine?
Perfect, sir. Absolutely right, sir.
Okay. So, first of all, thanks Chintan and thanks Arpit for the kind words. Good evening to all the participants. We have another 65-70 minutes to for me. I'll explain recent developments in charity taxation. Just a moment. No. Can you see the slide?
Absolutely,
Yes,
sir.
sir.
No, 1 minute. I am not able to see this.
अर्पित सर आपका कैमरा, चिंता सर आपका कैमरा बंद कर दीजिए ना.
Yeah, now it's fine with me. Okay.
Great, sir. Perfect. So we are there in background. Please continue, sir.
So broadly in my talk, I wish to cover amendments by the Finance Act 2021 and registration some aspects. Just a moment, there is some problem. Okay, so we start with the brief background of the relevant law. The first proposition is that income of a charitable institution is exempt to the extent applied to charitable or religious purposes in India. So how does the taxable income work out? It is income less application to charitable purposes. Unlike our other heads of income section, profits and gains of business, etc., here it is income less application to charitable purposes. The second proposition is corpus donations are exempt income. The third is there is a separate exemption to certain educational institutions, hospitals, etc. under section 1023C, and the entire exemption is subject to registration of the charitable institution. All these have been amended recently. So there is an amendment regarding corpus donation. There is an amendment regarding application of income, what constitutes income, a small amendment to section 11.2, and then there is section 1023C. These are the amendments by the Finance Act 21 2020-21. The first is on corpus donation. So what is the pre-amendment law? Section 11(1)(d) provided that voluntary contribution made with a specific direction that it shall form part of the corpus of the donee shall be exempt income. That was the law before amendment. Now the law provides that corpus donation shall be exempt subject to the condition that such voluntary contributions are invested or deposited in forms or modes specified in section 11.5, that is permissible mode, maintained specifically for such purpose, corpus. So this condition has been added, and if we paraphrase, now a receipt is exempt under section 11(1)(d) if all the following conditions are fulfilled. A charitable institution receives income, the income is in the form of contribution, the contribution is voluntary, the contribution is received with a specific direction that it shall form part of the corpus of the institution, the contribution is invested or deposited in permissible mode, and such investment or deposit is maintained specifically for such corpus. So the last two conditions in bold have been introduced by the Finance Act, and we will restrict our discussion today to these two conditions. These new conditions are not applicable to corpus donations received before 1st April 2021. And if the donation is exempt as corpus donation, obviously it will not qualify for 15% basic exemption. So the first point is the investment or deposit in permissible mode should be maintained specifically for such corpus. So what is the meaning of maintained and what is the meaning of specifically? Maintained means, and these are judgments under, not under, obviously under charity taxation, but in other contexts, courts have held that maintained means to keep in being, to keep in existence, to hold or keep in any particular state or condition. So to keep and to hold, that is the essence of maintain. And specifically means in a definite and exact way, clearly, exactly. So in the context, in my view, investment or deposit maintained specifically for such corpus means, number one, investment or deposit should be clearly or exactly towards corpus. It should be held at the same level as the amount of corpus donation claimed as exempt. That is, it should match with the amount of corpus donation. The investment or deposit should match. In the accounts, it should be clearly identifiable that it represents corpus donation, and it should be separate from other investments, deposits of the institution. So these are the requirements in my view for a corpus donation being maintained specifically. And this illustration shows, so let's say a corpus donation of 1 crore is received. What is the accounting entry you'd pass is fixed deposit, corpus 1 crore to bank 1 crore. Later on when you transfer it to a fixed deposit. And what is the possible disclosure in balance sheet? Cash and bank balance, fixed deposit with bank as corpus deposit, and other fixed deposits with bank, say 2 crores. So if you see the arrows, the corpus donation received and 1 crore and the fixed deposit, both are of the same amount. As I mentioned, they should be at the same level and they should match. Fixed deposit corpus is a separate account, so that's why it's separately identifiable. And in the balance sheet, fixed deposit with bank, a corpus deposit is separately disclosed, so there is a separate disclosure. So all this cumulatively satisfy the condition that the fixed investment or deposit is maintained specifically for such corpus. I now go to the next. What are the types of corpus donation? There are 2 types. One is what we understand as a typical or a classical corpus donation, where there is no purpose indicated by the donor, but he merely mentions that please treat this donation as towards your corpus. That's the situation 2 on this slide. The other one is, suppose a charitable institution has issued an appealed for, let's say, donations to construct a building or to buy equipment. Their courts have said that if a donation is received pursuant to such appeal, then it has to be regarded as a corpus donation. So if a donation is towards construction of building, or if it is towards purchase of equipment, etc., then it's a corpus donation exempt under 11(1)(d). So hitherto 11(1)(d) covered both the types of donations. Now the question is whether the donation in situation 1 continues as exempt donation under section 11(1)(d) after the amendment. And the problem has arisen because, as you saw, the corpus donation has to be maintained specifically. And if this donation is to be utilized for construction or purchase, how can one say that it is maintained specifically? So that's the argument on one side. On the other side, there are arguments to say that this proposition has been upheld by more than 15 judgments of High Court tribunal. In the absence of any express amendment to this effect, one should not read the amendment to be so wide that it would cover this type of donations also. The purpose, as indicated in the explanatory memorandum, also does not suggest. The purpose is to avoid double deduction, and no double deduction is claimed in this case. So if that is the purpose, and if the purpose is not defeated, why shouldn't the such donation continue to be covered as corpus donation? There is no answer at this stage. I would point out 2 things. One is, if you really wish to claim and continue to claim the donation as a corpus donation, then you ought to comply with the latter part, that you should immediately invest or deposit it in a specified form and keep it separate, maintained specifically for that purpose. Now that may be for a small period, but at least you have complied with the immediate provision. And I'll come to it later on. Utilization per se is now permitted by the law itself. The law does not indicate how long should the corpus be kept or the investment or deposit be kept. And if the law does not indicate, even if it is for a small period, it should be regarded as a corpus donation. So one suggestion would be to comply with the condition. The other point is that even if you don't consider it as a corpus donation, you will get the utilization as application of income. But there is one additional advantage and a benefit, that the 15% basic exemption will also accrue to you, because once it is income, then that 15% exemption is available if one has not spent the total amount. If there is other income, what I want to convey is that if there is other income apart from this corpus donation, then to that extent you will benefit on account of the 15% basic exemption. So these 2 points I would feel one should consider. The next one is period within which the donation is to be invested or deposited in permissible mode. Now, donation can be received in various forms. You could get cash, it could come by a bank transfer or a check, or in kind, permissible or impermissible. And one has to see for each of these, what are the consequences under the amendment. So the first type of donation is cash donation. Obviously, cash is not a permissible mode. So one should invest or deposit the cash donation in a permissible mode as soon as practicable. The second is you should keep such corpus deposit and investment separate from other deposits stroke investment, as I mentioned, and separate disclosure, separate asset, etc. If one does that, the cash donation can be exempt under 11(1)(d) after the amendment. The next point is whether the cash received can be directly utilized towards purpose of the charitable institution, and the answer is no, because the donation per se has to be invested or deposited in a permissible mode. And if you utilize it towards purpose of the charitable institution, you are not investing or depositing it. And if it's not invested or deposited, you cannot get you cannot treat it as exempt corpus donation. The second is check stroke NEFT donation. Now this also, the donation can not be retained in a bank account mixed with other donations, because then it is not satisfying the condition of maintained specifically for such corpus. It's a fungible bank account containing deposits, other deposits also. So I would suggest, and rather it should be kept in a corpus deposit or investment separate from other deposits investment as soon as practicable. So there ought to be periodic transfers from your normal bank account to the other bank account. Now initially that other bank account may be a normal current account. You don't have, because current account is also in a bank is also covered under section 11(5), and you may take your time in actually investing or depositing it in a fixed deposit, etc. But a separate bank account for corpus donation will satisfy the condition that it is maintained, that account is a investment which is maintained specifically for corpus donation. So in essence, open another bank account and transfer all the corpus donations to that bank account. Keep there till you decide where you want to deposit or invest. The third is donation in kind, which is in a permissible mode. So immovable property, units of mutual fund, etc., they are permitted by section 11(5). So here, in my view, what is required is merely appropriate accounting disclosure that they are corpus donation and corpus or corpus asset. You don't have to do anything else, because it being in 11(5), there is no need to convert it in a permissible mode. The last and the most, I would say, unclear is a donation in kind which is not in permissible mode. So say bullion, debenture, etc. These are not covered by section 11(5). And suppose a charitable institution receives such donations in kind. The question is, do they have to be liquidated and converted into a permissible mode? And there are two views on this. One is obviously this more conservative view, that the institution is required to convert donation into a permissible mode. If it is not in a permissible mode, then it has to be converted, because that's the requirement of the amended section. The other view, see, the language is the contribution is invested or deposited in a permissible mode. So what you receive is invested or deposited. On a plain reading, it means a donation which can itself be directly invested or deposited in a permissible mode. It should be capable of being invested or deposited. Now here, when you receive a donation in kind, it is not possible to directly invest it in a permissible mode. You have to liquidate it. There is an intermediary step. You have to liquidate it and then invest or deposit in a permissible mode. So the argument is that the law does not contemplate this type of donation which cannot be directly invested or deposited. And there are two indirect arguments based on section 13.2h and section 13.1d. The third bullet, if you see, section 13.2h is reproduced there. Property of a charitable institution shall be deemed to have been applied for the benefit of an interested person if any funds of institution are or continue to remain invested for any period during the previous year in any concern in which any interested person has a substantial interest. So the bold words are invested, and Calcutta High Court has interpreted this. So there the trust received shares, and the argument of the department was that your shares are not invested, or they continue to remain invested with an interested person. The shares were of an interested person, and hence you are violating section 13.2h. And Calcutta High Court gave two arguments. One is that the funds cannot include assets other than money in hand or cash or a credit balance in bank account. But the second part, which is again highlighted here, these assets have to be converted into money or cash before they can be invested. Consequently, they are not capable of being invested and are not covered by section 13.2h. So I would use the same argument for 11.1d. If for 13.1d, the shares, if they have to be converted into money and hence they are not capable of being invested. Similarly, for section 11.1d, the asset which one receives, if it has to be converted into money, it is not capable of being invested and hence not covered by the amendment. The second one, section 13.1d also similarly states that exemption under section 11 is not available if any funds of the institution are invested or deposited otherwise than in permissible mode. So funds are invested or deposited, and Madras High Court said in case of donation of movable or immovable property, it is not incumbent on the part of the recipient to convert the same into money and invest the proceeds in the mode specified under section 11.5. And this is important. The next sentence, to recognize that would be to destroy trust holding properties movable and immovable, and to annihilate philanthropy and generosity of donors as well. So if you see 13.1d, funds invested or deposited otherwise than in permitted mode, and Madras High Court said it is not incumbent to convert the same. One could use the same argument for 11.1d, that such donations which are not in permissible mode, it is not incumbent on the part of the recipient to convert the same into money and invest the proceeds in the mode specified under 11.5. There is no clear answer to this. I have pointed out the arguments. It will take years before tribunal and courts will decide this. So one will have to be very cautious while accepting such donations, at least in the initial period, unless the CBDT clarifies that yes, 11(1)(d) exemption will continue to be available to such donations. And even if you treat them as corpus donations, separate disclosure, I would feel you should make it as corpus donation and a corpus or a corpus asset. The next question, what is the period for which investment or deposit in permissible mode is required to be maintained before it can be utilized towards charitable purpose? So it's the law says maintain specifically, but obviously it doesn't mean perpetually. And I have brought again classified them into two types of donations. Donation where the donor has indicated a specified purpose, as I mentioned here. Donation where the donor has indicated a specified purpose. Now, if you treat this as a corpus donation, then it can be immediately utilized, barring the intermediary period where you have transferred the donation to a separate corpus donation account. After that, it can be utilized if you hold that it's a corpus donation. The second one, the donation where no specific purpose is indicated by the donor. It can be utilized because explanation 4.1, which I'll come to it later on, clearly provides now that a corpus donation can be utilized. But the question is when? And again, it arises on account of the donation has to be maintained. And law is silent regarding period of retention. I would feel a reasonable period should suffice. It should not be a scheme that you treat all donations as corpus donation in year one and treat all of them as and utilize them in the second year. If you don't do such scheme or a tax avoidance plan and you maintain for a reasonable period, in my view, the donation can be utilized. Only other point that one has to see is that there should not be any prohibition in trust deed for utilization of the corpus. If there is if a general prohibition is there in the trust deed that a corpus donation cannot be utilized for the purposes of the trust, then irrespective of tax, you'll have a breach of trust for the trustees. The next one is, what if the donation does not satisfy the new condition? What if the investment or deposit in permissible mode is not made or is not maintained? And the first one is obviously the contribution shall be taxable as income under section 11(1). The next is the income will be exempt to the extent it is applied towards charitable purpose. And if the income applied to charitable purpose is less than 85% of the income, then 15% of income would be exempt. You also have two more options. So under explanation 1.2, that the income applied during subsequent previous year may also be deemed to be income applied to such purposes. The clawback, as we call it, a clawback deemed application. And the last one is secondary accumulation for a period of 5 years. So the SSC will be entitled to obtain benefit under 11.2. So in essence, if a particular donation is not treated or is not held as a corpus donation, then it will be at par with any other donation which qualifies as income under section 11.1, and it will get all the benefits associated with that income like any other income. So exemption under to the extent applied, accumulate 15%, all these benefits will come to the corpus donation or the donation not satisfying the new condition. I now go to the next topic, application out of corpus donations. So what was the pre-amendment controversy? Corpus donations are exempt income, and allowing expenditure from such donations as application of income would amount to double deduction. That's what Chennai Tribunal said, and that is what a purpose mentioned in the explanatory memorandum. So the pre-amendment controversy was, on one hand, a trust was claiming corpus donation as exempt, and on the other hand, the expenditure from such donations was claimed as application of income. Now the amendment states that application out of corpus shall not be considered as application of income for charitable purposes for the purpose of section 11(1)(a). So if your corpus donation is exempt and if you utilize it subsequently, that utilization will not be considered as application of income for charitable purposes. And explanation 4, small Roman 1. The first point here would be proper accounting entries by donor, especially for corpus account as a liability, would be required. In my view, he should have proper accounting entries. The second, what are the consequences if corpus donation is utilized to incur capital expenditure, say a building of ₹1 crore? And this is interesting. So ₹1 crore will not be allowed as application of income. But in the books of account, building account will be debited by ₹1 crore and depreciation will be provided on it. The question is whether this depreciation is allowable in computation of income. Now, as you heard the previous speaker, depreciation is not to be allowed in computation of income if capital expenditure has been claimed as application of income. The important word here is only if capital expenditure has been claimed as application of income. In this case, application out of corpus shall not be considered as application of income. So the amount of capital expenditure of ₹1 crore would not be allowed as application of income. And if it is not allowed as application of income, section 11(6) will not apply. So if section 11(6) is not applicable, what happens? In my view, the general law would apply, and there the Supreme Court has said the depreciation is allowable on commercial principles when section 11(6) is not applicable. So that part of the judgment would still apply when section 11(6) is not applicable, and one may be able to argue that if the corpus donation has been utilized to incur capital expenditure on which depreciation is claimed, then that depreciation is allowable on general commercial principles. I now go to restoring the corpus. So what is the amendment and what are the conditions for applicability? 4 conditions. 1, corpus is applied towards charitable purposes. Such application has not been treated as application of income for charitable purposes. Subsequently, income is utilized to invest or deposit back into permissible mode, and such investment or deposit shall be maintained specifically for such corpus. So you have initially applied the corpus and then utilized the income to invest back into permissible mode. If all these conditions are satisfied, what are the consequences? The income so utilized shall be allowed as application to the extent it is invested or deposited back, and in the year of utilization for investment stroke deposit. And that's what the proviso to expiration 4.1 to section 11.1 states. So the amount that you put back into an investment or deposit will be allowed as application of income to the extent it is invested. So again, in my view, accounting entries will be required for increasing the amount of corpus investment and corpus account. And let's take one illustration to understand the concept. In financial year 2022-23, let's say a charitable institution receives rupees 1 crore as corpus donation, which is exempt under 11(1)(d). So 1 crore is initially received as corpus donation. After 2 years, in 25-26, the institution utilizes the corpus investment of 1 crore towards its object. That will not be allowed as application of income. The next subsequent year, the institution earns income of rupees 2 crores. It reinvests rupees 1 crore into permissible mode and thus restores the amount of corpus, and it applies rupees 50 lakhs towards other charitable purposes. So how would the computation look in assessment year 2027-28? So income 2 crores, application of income towards corpus reinvestment 1 crore, charitable purposes 50 lakhs. So total application would be 1.5 crores. Income less application would be 2 crores minus 1.5 crore is 50 lakhs. 15% of income of 2 crores, 30 lakhs, and taxable income would be 20 lakhs. So in other words, the investment of, the utilization of year 1 or the earlier utilization is allowed in the subsequent year. Obviously, the reinvestment or deposit has to be out of income of the year. If it is not out of income, then this benefit won't be available. The question is, what happens to corpus utilized before 1st April 21 but restored after the said date, whether allowable as application of income? In my view, no, because the proviso says, the one which allows this, the amount not so treated as application of income in the preceding paragraph will be allowed for restoration of corpus. So if the corpus has been utilized before 1st April 21, then it is not governed by the new law. And if it is not governed by the new law, the benefit of restoration of corpus also will not be available. We now go to the next topic or amendment, application of income vis-a-vis loans and borrowings. So what is the pre-amendment law? Section 11(1)(a), the relevant portion, it reads, income derived from property held under trust wholly for charitable or religious purposes is exempt to the extent to which such income is applied to such purposes in India. So income to the extent to which such income is applied to such purposes is exempt. But application to charitable purpose out of loans and borrowings is not application of income. It is application of loans and borrowings. And that's why Bangalore Tribunal and Chennai Tribunal held that any such application out of loans and borrowings will not be allowed as application of income. And now the amendment, what does it do? It accepts that principle and provides that application from loans and borrowings shall not be considered as application of income for charitable purposes for the purposes of section 11(1)(a). The same principle has been accepted by the amendment. If you apply from loans and borrowings, you will not get it, your income is exempt as application of income. Let's take one illustration. So income of the charitable institution let's say 1 crore, borrowing during the year 2 crores, application towards charitable purposes 2.5 crores, and let's application out of borrowing say 2 crores. So there is a direct nexus between borrowing and application. So computation of application of income would be application towards charitable purpose 2.5 crores less application out of borrowing 2 crores, and balance would be considered as permissible application and 50 lakhs. So in this case, income of 1 crore, application of 50 lakhs, and the balance 15%, 11.1, 11.2, etc., etc. So in essence, the application of income to the extent borrowings have been utilized will not be considered for the purpose of exemption of the income. A question that arises is, what about sundry creditors? So you incurred expenditure, but it is unpaid at the end of the year. So are such sundry creditors loans or borrowings? And in a different context, Supreme Court said that amount payable to sundry creditor is a debt and not a borrowing. And I would feel the same principle will apply here. A sundry creditor is not a lender or a borrower. I mean, a lender. There is no loan or borrowing by the charitable institution when it does not pay a sundry creditor. And although there is a controversy, the Bangalore Tribunal and the Delhi Tribunal have held that even if a debt is due but not paid before year end, there is application. So sundry creditors for capital asset in that case were allowed as application of income. Delhi Tribunal also said application is not to be restricted to actual cash outflow in such circumstances. On the other hand, Chennai Tribunal said that application on account of sundry creditors is not application of income. I would personally believe that the Bangalore and Delhi Tribunal they have held the right view, and even after the amendment, a sundry creditor will not bar the expense incurred on account of sundry creditor will not bar a charitable institution from claiming such expenditure as application of income. Now, the flip side, you borrowed and now you repay. So what happens when the loan is repaid? The pre-amendment law was very clear that utilization of income for repayment of loan taken to fulfill an object of the trust amounts to application of income for charitable purposes. And there was a CBDT circular and umpteen decisions. I've quoted only two, Madras High Court and Karnataka High Court, where they clearly held the proposition that utilization of income for repayment of loan is application of income. This principle is now accepted in the amendment that amount of borrowing repaid out of income shall be allowed as application in the previous year in which it is repaid. So the borrowing will be allowed as, the repayment will be allowed as application of income. And a small illustration again, if the income is 2.5 crores, there is a repayment of borrowing of 2 crores. There is other application towards charitable purposes of 50 lakhs. And so the total application would be 2 crores plus 50 lakhs, 2.5 crores, 2 crores on account of the amendment. The question that comes is, what happens to repayment of a loan effected before 1st April 2021? So will such repayment be allowed as application of income? The answer would be not under the proviso, but on general principles, I would feel it is allowable. Only condition would be that in the year of borrowing, that application was actually reduced by the amount of borrowing and there is no double deduction. So if you have not reduced the borrowing in the year of borrowing for the computing the application of income, then obviously the repayment will not be allowed on general principles also. But if you have reduced the amount of application expenditure by the amount of borrowing, then the proviso will not apply, but on general principles, in my view, it will be considered as application of income. This is the last one on section 11.1, set off of excess application of any preceding year. What was the pre-amendment law? There was a miscellaneous application before Supreme Court in CIT versus Subros, and the question was whether any excess expenditure incurred by the trust of charitable institution in earlier year could be allowed to be set off against income of subsequent years by invoking section 11 of the Income Tax Act 1961. So this was the question in the MA, and Supreme Court dismissed it. Not on it said that even on merits this is not worth it, in the sense it will be allowed, the set off will be allowed, any excess expenditure of earlier years will be allowed as against the income of subsequent years. Similarly, another Supreme Court decision preceding that, CIT versus Rajasthan and Gujarat Charitable Foundation, and there are observations of the Supreme Court that once assessee is allowed depreciation, he shall be entitled to carry forward the depreciation as well. So under both these judgments, the excess expenditure was allowed to be set off in the subsequent year. Now, what is the amendment? For the computation of income, no set off or deduction of any excess application of any of the preceding years shall be allowed. So the judgments of the Supreme Court have been neutralized by this amendment. No set off or deduction of any excess application. And we take the illustration. So year one, let's say there is excess of expenditure or income 1 crore. Year two, income for the year is 3 crore. Now in year two, calculation under pre-amendment law was that income for the year of 3 crores, you could get deficit of year one of 1 crore, and the income would be calculated at 2 crores. The deficit was allowable in computation of income itself. Now, under the amended law, income for the year in the second year would be 3 crores, and deficit of year one will not be allowed, and the income would be 3 crores. So one interesting point arises out of this. The amendment bars set off of deficit in computation of income. So there are two things, income and application of income. The amendment says in computation of income, the deficit will not be allowed. But there is no amendment regarding set off of deficit of preceding year as application of income during the year. So the amendment is on income, not on application of income. So the question that arises is, can I set off this deficit against application of income? Not against income, because obviously the law has been amended, but whether it can be allowed against application of income. Now, interestingly, there are 3 High Court judgments under the pre-amendment law, which stated clearly that excess application of preceding year is allowed as application of income in the year in which such set-off is done. So the question is, are these judgments still relevant or not? If they are relevant, then one can claim the set-off, one can claim the deficit of earlier years against as application of income following these judgments. The slight problem arises on account of the Supreme Court judgment. Supreme Court said that it should be allowable to be set off against income. So Supreme Court said deficit is allowable against income. Does it mean that the Supreme Court indirectly held that the deficit is not allowable as application of income? If that is the case, then these judgments of High Court are neutralized, but or rather no longer valid. But if it is not, then even after the amendment, I think one could argue that the deficit should be allowed as application of income, although it is not allowable as against income. Highly litigative, I'm not sure, but I just thought I'll point out to you. Maybe in some years, even this controversy will be settled. We don't have much time, so I'm not taking this illustration. We're explaining the different concept. If it is not allowed as set off against income or reduced from income, how does it impact if it is allowed as set off as application of income? We have quite a few other topics to cover, so I'll skip this illustration. The next is widening the scope of restriction under explanation to section 11.2. So as you know, section 11.2 provides for accumulation for a period of 5 years and spending it in those period of 5 years. The explanation states that payment to prescribed entities out of accumulation shall not be treated as application. So if the charitable institution which accumulates for 5 years gives a donation to another charitable institution, then that donation would not be allowed as application of income and would be taxable. And there were prescribed entities including 12A, etc., but they didn't include institutions registered under 12AB. Now the amendment provides that payment to a charitable institution registered under 12AB will also not be treated as application, and the amounts of paid shall be deemed to be income of the institution. So this is the summary of the amendments in section 11. Corpus donations shall be exempt only if they are invested or deposited in permissible mode. Application out of corpus shall not be considered as application of income for charitable purpose. Amount utilized to restore the corpus by investing or depositing it back in permissible mode shall be regarded as application of income. Application from loans and borrowings shall not be considered as application of income, but amount of borrowing repaid out of income shall be allowed as application. For the computation of income, no set off or deduction of any excess application of any of the preceding years shall be allowed. And finally, payment to entity registered under 12AB out of accumulation shall not be treated as application. We now go to section 1023C. A section which has 20 provisos, 4 explanations, 2 provisos in an explanation, and 2 explanations with provisos. So there are provisos in explanations and explanations in provisos, and there are independent explanations and there are independent provisos. The first amendment, 1023C, 3AD and 3AE. Those sections provide for exemption of income of educational institutions and hospitals, subject to the condition that the annual receipts do not exceed the prescribed amount. So the pre-amendment law was that the prescribed amount is rupees 1 crore under Rule 2BC, and the limit is applicable to each institution. So if a charitable trust was running, let's say, 5 schools, and if each of these schools had receipts of less than 1 crore, then each of them qualified for exemption under 1023C 3AD. And tribunal consistently held that, including and Karnataka High Court also. Now, what is the amendment? So 1 crore has become 5 crores, and the amendment has been brought in the section itself. So till 5 crores, section 1023C 3AD will apply. But the limit is now to a person, that is a SSC. So if the same SSC which I mentioned, if it is running 6 institutions and the collective receipts are 6 crores, then although individually the receipts are less than 5 crores, the institution will not get exemption under 1023C, because as a person, as the SSC, its aggregate annual receipts exceed 5 crores. The law has gone a step further, that suppose a charitable institution is running hospitals as well as educational institutions, then the aggregate of receipts of the hospitals as well as educational institutions should be computed, and if such aggregate of annual receipts from all such institutions, educational institutions and hospitals exceeds rupees 5 crores, then the exemption under neither of the said clause will be available. So the receipts will be clubbed for hospital as well as in, schools run by a charitable trust, and the aggregate should not exceed 5 crores. The next is change in the meaning of corpus donation. Under the pre-amendment law, 85% of income shall be utilized wholly and exclusively towards charitable purpose in 5 years. That's the third proviso. And for this, explanation provides that income does not include corpus donations. Now the amendment states that income shall not include corpus donation, subject to the condition that such voluntary contributions are invested deposit. So the condition which is introduced is same as what we saw for section 11(1)(d), and the conclusion or the inference is that if the corpus donation satisfies the condition, it is exempt even if it is not utilized towards charitable purpose. But if the corpus donation does not satisfy the condition, then it will be regarded as income and it will have to be utilized for charitable purpose. 85% of it will have to be utilized. The other amendments are similar to those in section 11(1). So application from exempt corpus shall not be treated as application of income, and if it is restored, it will be allowed as application of income. We don't have to discuss this, we discussed in section 11. Similarly, for borrowings, application from loan or borrowing shall not be treated as application of income, but the repayment of loan will be considered as application of income. So provisions similar to those in section 11(1) have been inserted in section 1023C also. The last amendment, no set-off or deduction of excess application of any preceding year to be allowed. So the income required to be applied shall be calculated without any set-off or deduction of any excess application of any preceding previous year. Again, same as that in section 11(1), same implications. So income cannot be reduced by the excess application or the deficit of earlier year for the purpose of 1023C also. Similarly, here also reference to section 12AB has been included, just as it is included in explanation to 11.2. So if the accumulated amount is paid to an institution registered under 12AB, then that it will not be regarded as application of income. I now take up some aspects of registration. As you all know, massive amendments were made in the registration provisions, initially by the Finance Act 2020, then deferred, and finally by the Taxation Laws Relaxation Act have been introduced from and will take effect from, we have taken effect from 1st April 2021. And then the rules have come. Briefly, the application for registration in Form 10A is required to be made by a charitable institution already registered under 12AA or a new institution not already registered. So that's the rule and the form, and the registration order to be issued in form number 10AC. The important things are, and this is A, registration can be granted subject to conditions. So yes, serial number 10 in form number 10AC provides that registration can be granted subject to conditions. The CIT would be entitled to prescribed conditions. Now, see, there are a few cases under the pre-amendment law, and what they state is that the CIT would be entitled to impose reasonable conditions, but the conditions should not be such that they override the act. They should not be contrary to the act, and if any condition which is contrary to the act, then it becomes non-binding. It is not, it's a directory, it's not a mandatory uh, condition. So for example, in one case, it was stated that you will not collect fees from such beneficiaries. And the tribunal said, no, that is not permitted by the law. So that type of condition is not permitted. In another case, the CIT said, you have got shares, you will not dispose them of without my prior permission. And again, the tribunal said that that is not a condition warranted by the law, and hence it is not binding. But apart from that, a reasonable condition, tribunal said, would be allowed to be issued by the CIT. One. This is, see, we were all along told that this registration is automatic. We don't want to interfere for 5 years, etc. But the serial number 9C in Form 10AC says, in following circumstances, the order is liable to be withdrawn if it is subsequently found that, and there are 5 different situations provided by the serial, by the form. The activities of the applicant are not genuine, which is fine. The activities of the applicant are not carried out in accordance with all or any of the conditions subject to which it is granted. The applicant has obtained the registration by fraud. The applicant has obtained the registration by misrepresentation of facts. And the final one, the SSC has violated any condition prescribed in the Act. The fifth one is very nebulous, very wide. And the second one, not carried out in accordance with the conditions. So as I mentioned in the preceding slide, conditions, yes, reasonable conditions, yes, but they cannot override the act. And if that same principle applies post amendment, then this is going to be a very litigative issue, because if the CIT has imposed a condition which is not really permitted, and later on if the applicant or the SSE has not complied with the condition, he could withdraw the registration. And withdrawal of registration, obviously loss of exemption under Section 11, leave aside the controversy as to whether exit tax is leviable, although in my view, mere withdrawal cannot result in levy of exit tax under 115 TD. The second point here, if you they highlighted subsequently found. Now, what is the meaning of subsequently? 1 year, 2 years, 3 years, 4 years, 5 years? There is no clarity on that. So, if registration is granted to an existing charitable trust, and after 5 years, the CIT wakes up and states that no, you have violated this one of these 5 conditions or vice situation, and I will withdraw. So, the consequences could come even after 5 years. The third point, and this is under the rule, registration granted can be cancelled. And second bullet, in following circumstances, the PCIT or CIT may cancel the registration granted in form number 10AC and the URN issued under Rule 2C. Not providing information, providing false information, providing incorrect information, not providing all or some documents required to be provided, 10A has not been furnished electronically, or 10A has not been duly verified. In any of these circumstances, the CIT may cancel the registration. Again, the cancellation may be effected at any point of time. So, and if the registration or URN are cancelled, they shall be deemed to have never been granted or issued. So a cancellation will have retrospective effect right from the date of grant of registration, and all the consequences arising out of such cancellation will follow. The two mitigating factors are the cancellation shall be effected only after giving the SSE an opportunity of being heard, and the PCIT or CIT may cancel the registration. And fortunately, courts have said that may is not only directory, it is not compulsory, but also there have to be proper reasons for the CIT to cancel the registration. You know, it's not an arbitrary power with the CIT to cancel. So if there is a small mistake out of so many documents to be given, if one is inadvertently not given, and if the SSC rectifies it and provides it to the CIT when the no show cause notice is issued, in my view, the CIT should exercise this power in favor of the applicant and not cancel the registration. So here also the question of exit tax will arise. 115 TD states that if the registration is cancelled, then exit tax at the rate of 30% plus surcharge would be levied. The question is whether this cancellation will result in exit tax. Again, very litigative area, but I would point out one subtle difference between a registration issued and cancelled and a registration which is deemed to have never been granted or issued. So if a registration is never granted or issued, how can it be cancelled? Only a validly granted registration can be cancelled, and only if the registration is validly granted, that its subsequent cancellation can result in exit tax under 115 TD. The point is, all these are bound to be litigated in subsequent years. The next one is pending application as on 31st March 2021. So there are many charitable trusts who applied before 31st March 2021. Their applications were not disposed of, and what happens to them? So first is that the law provides that they are deemed to be made as on 1st April 2021. So an application made before 31st March is deemed to be made on 1st April 2021. So now the question is, any application made on and after 1st April, the applicant is required to apply in Form 10A. So is this applicant also required to reapply in Form 10A? In my view, no, because the application is deemed to have been made. It's already made, and if it is already made, there is no question of reapplication in form number 10A. The next question, will the registration order be issued in form number 10AC? And the problem here is no, because the order under the rules is to be issued only if application is made in form 10A. If application is not made in form 10A, then the rules are silent. So this SSE who made an application before 31st March, whose application was not disposed of by the CIP till 31st March, whose application is deemed to have been made on 1st April, the rules don't provide for any registration order under form number 10AC. So obviously the rules will have to be amended, but they are in a limbo, at least at this stage. The last one is the most crucial. Will the applicant get benefit of exemption under section 11 from the original year of application? Arpit, I have crossed the limit. Can I take another 5-7 minutes? Hello?
Yes, sir. Yes, please go ahead, sir.
Yeah, thanks. Okay. So, see, section 12A2 states that the applicant will get benefit of section 11 from the financial year in which he made the application. That's what 12A2 states. The section 12AB2 states that it will be deemed to have been made, as I mentioned in the first point, it is deemed to be made on 1st April 2021. So if it is deemed to be made on 1st April 2021, then for section 12A2, will 1st April 2021 be considered as the date of application? And if 1st April 2021 is considered as the date of application, then the income for the actual financial year in which the charitable trust made the first application will not be exempt unless it is covered by the proviso, which may not, I will not get into it, but to my mind, at least at this stage, 2020-21, financial year 2020-21, that will not be covered by the proviso. So what is the answer? Again, an interpretation issue. In my view, a trust should not be penalized for something for which it is not to be faulted. Number one, the fiction of deemed to be made on 1st April 2021 should be restricted to 12AB2. It should not be extended to 12A2, and there one has to see the actual date of application, and if the application has been made in 2020-21, that is the original application, then the income of 2020-21 ought to be regarded as exempt. Again, no clarity, litigative issue, but I would feel case is better for the SSE over here. And then approvals under section 80G and 1023C. So the provisions are similar to those for registration. I will not get into them. The last one, I wanted to point out an anomaly in the provision. So for a new charitable institution, it's granted provisional registration for 3 years. The law very clearly provides that it is granted registration for 3 years. And there is a time limit for application for final registration. And what is the time limit? Earlier of the following. So at least 6 months prior to the expiry of the period of the provisional registration, or within 6 months of commencement of its activities. So if you take the illustration, a trust formed in July 21 commences activities on 15 July 2021. The trust makes so immediately after formation, it starts its activities. It makes application for registration on 31st August 2021. The PCIT grants provisional registration on 30th September 2021. And the registration is granted for 3 years from assessment year 2022-23, that is up to assessment year 2024-25. The question is, when is the trust required to apply for final registration? Six months of commencement of activities, within 6 months, and it's the earlier. There are two time limits, but the earlier one is within 6 months of commencement. In our case, the activities commenced on 15 July. So really speaking, on 15 January, this commencement of activities, 6 months of commencement of activities will get over on 15th January. So although the registration is ostensibly granted for 3 years, because of the time limit, the trust will have to immediately apply for final registration. And the problem with final registration is that it is a full-fledged process, as today it is 12A and 12AA. The CIT can make inquiries, ask for documents, check whether there is compliance with material laws, etc., etc. So the problem is that although the registration is granted for 3 years, the way the time limit for final registration is mentioned, a trust, if it does not commence activities, then only it will enjoy the benefit of 3 years, but otherwise it could be within 6 months of commencement of activities. So that brings me to the end of my talk. I once again thank the WIRC for giving me this opportunity. I acknowledge the contribution by my assistants, colleagues Aditya Bhatt, Kausar Sheikh, and Lalit Sharma, without whose help this PPT would not have been possible. And I thank you all. I hope you found this useful. Thank you.
Thank you, sir. Absolutely, undoubtedly, it has been a wonderful session, and I mean, everyone's, of course, if you can share the PPT, we'll be happy. We can circulate it amongst the people.
I'll do it tomorrow.
Sure, sir. Sure. Thanks a lot, sir. And really, wonderful, sir. I mean, the bar, the expectation that we always had when your name comes up on any particular topic, I think it's just wonderful. I would request Gautam to please, yes, sir. Sir,
Yes.
anything? So, do you wish to share anything, or? All right. So I'll request Gautam to please quickly give your concluding comments and also give a hearty vote of thanks for a wonderful session. Over to you, Gautam.
Sure, Arpit. Thank you. Good evening, everyone. So I deem it a great honor to propose vote of thanks on behalf of WIRC of ICI. It was a delight to hear you. You have very well explained the recent developments in Charity Commission. Thank you for sharing your rich experience with us. I am pretty sure that the precious knowledge that you gave us today will be helpful to all of us in future. We are looking forward to host you again, sir. Thank you so much.
My pleasure.
Thank you, sir. Thanks a lot. Thank you, all the participants. This was day 2. We'll see you soon on the day 3. And for any further, if unfortunately we will not be able to take questions because we're running out of time, and the content itself was so wonderful. I'm sure all of these questions would have answered. Should you have any questions, you can please feel free to write to us. at wirc@ici.in, or to any of the speakers, and I'm sure they'll be happy to help you and guide you. On this note, let us sign off for today. Thank you once again for coming and attending this session and making this as a huge success. I thank you. Thanks to all the logistics partner, Mishra, Vaibhav, Subhash, for handling this effectively. Let's stop the recording and upload it for further viewing. See you soon in day 3. Thank you, everyone.
Thank you, sir.
Thank you, Gautam. Gautam, EY again. All right. Good night.